They didn't just beat the market, they rewrote the rules. From Warren Buffett's patience to Soros's boldness, from Templeton's global vision to Lynch's everyday genius, this is the playbook of the greatest investors of all time. And today, it's yours. The Great Investor's Playbook. Benjamin Graham, the father of value investing. Benjamin Graham, often hailed as the father of value investing, laid the foundation for generations of successful investors. His approach centered on finding undervalued companies with strong fundamentals, emphasizing the importance of a margin of safety. Graham's seminal work, The Intelligent Investor, remains a Bible for value investors worldwide. As he famously stated, the essence of investment management is the management of risks, not the management of returns. This principle continues to guide investors through turbulent markets and economic uncertainties. Warren Buffett, the Oracle of Omaha. Warren Buffett, the Oracle of Omaha, took Graham's teachings and elevated them to an art form. Buffett's strategy revolves around long-term compounding and a laser focus on business fundamentals. Through Berkshire Hathaway, he built an empire that stands as a testament to the power of patient, value-driven investing. Buffett's wisdom echoes through the ages. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. This simple yet profound insight has helped countless investors navigate the complexities of the stock market. Peter Lynch, the everyman's genius. Peter Lynch, often referred to as the everyman's genius, brought investing down to earth. His mantra, "Invest in what you know," empowered ordinary individuals to leverage their everyday experiences in the stock market. As the manager of Fidelity's Magellan Fund, Lynch achieved an astounding 29.2% annual return, proving that great investments can be hiding in plain sight. He encouraged investors to look for 10-baggers stocks with the potential to grow tenfold right in their own backyards. George Soros, reflexivity and bold bets. George Soros, the man who broke the Bank of England, approached investing from a different angle. His theory of reflexivity posits that market prices can influence the fundamentals they're supposed to reflect, creating feedback loops that savvy investors can exploit. Soros's bold macro bets have become legendary, demonstrating the power of understanding global economic trends. He reminds us, markets are constantly in a state of uncertainty and flux, urging investors to remain adaptable and alert to changing conditions. John Templeton, global contrarian. Sir John Templeton expanded the horizons of investing, quite literally. His contrarian approach of buying at the point of maximum pessimism led him to seek opportunities globally when most investors remained focused on domestic markets. The Templeton Growth Fund became a beacon for international investing, proving that diversification across borders can yield extraordinary returns. Templeton's strategy teaches us to look beyond our immediate surroundings and think contrarian when others are gripped by fear or euphoria. Philip Fisher, Scuttlebutt and Growth. Philip Fisher brought a unique perspective to investing with his Scuttlebutt method. He advocated for thorough research, including talking to suppliers, customers, and competitors to gain a comprehensive understanding of a company's potential. Fisher's focus on innovation and management quality helped identify growth stocks with staying power. As he wisely noted, the best investment ideas come from first-hand observation. This approach reminds us that the most valuable insights often lie beyond financial statements. Charlie Munger, mental models and patience. Charlie Munger, Warren Buffett's right-hand man, introduced the concept of mental models to investing. His multidisciplinary thinking draws from various fields, including psychology, economics, and physics, to make more informed decisions. Munger's emphasis on avoiding cognitive biases and maintaining a long-term perspective has been instrumental in Berkshire Hathaway's success. His advice to stay rational and patient in the face of market volatility remains crucial for investors navigating today's complex financial landscape. Jesse Livermore, speculation and discipline. Jesse Livermore, a speculator from a different era, offers timeless lessons in discipline and trend following. His experiences, immortalized in reminiscences of a stock operator, highlight the importance of emotional control and market respect. Livermore's famous quote, The market is never wrong, opinions often are, serves as a humbling reminder to investors who think they can outsmart the market consistently. Other great investors across the globe. As we look beyond these titans, we find a wealth of wisdom from great investors across the globe. Their diverse strategies, risk management techniques, and even their failures offer valuable lessons. From the value investing prowess of Seth Klarman to the quantitative approaches of Jim Simons, the global investment landscape is rich with insights waiting to be discovered. Common traits of great investors. What unites these great investors, despite their varied approaches, are several common traits. Emotional discipline stands out as a cornerstone of their success. The ability to remain calm and rational when markets are in turmoil has proven invaluable time and again. Independent thinking, another shared characteristic, allows these investors to see opportunities where others see only risk. Their commitment to rigorous risk management ensures that no single mistake can derail their long-term success. Perhaps most importantly, their unwavering focus on the long term enables them to weather short-term volatility and capitalize on the power of compounding. To help aspiring investors cultivate these traits, young investors can develop an investor mindset checklist. This tool encourages reflection on emotional reactions to market movements, the sources of your investment ideas, and your risk tolerance. By regularly assessing your mindset against these criteria, you can develop the mental fortitude that characterizes the world's greatest investors. If you found value in this video, subscribe, like, and share. How to build your own playbook. Building your own investment playbook is a journey of self-discovery and continuous learning. Start by choosing a strategy that resonates with your personality and goals. Whether you're drawn to value investing, growth investing, or macro approaches, the key is to find an edge that sets you apart. This could be specialized knowledge in a particular industry, a unique analytical approach, or simply the patience to outlast market irrationality. Defining your edge is crucial, but so is managing risk. Even the most brilliant strategy can fail if not accompanied by prudent risk management. Diversification, position sizing, and setting clear exit criteria are all essential components of a robust risk management framework. As you develop your playbook, remember to combine timeless principles with personal insight. The strategies of Graham, Buffett, and others provide a solid foundation, but your unique experiences and perspectives can offer valuable additions to this time-tested wisdom. Summary and reflection. Legacy through logic. In the end, great investing isn't about genius. It's about clarity in your thinking, courage in your convictions, and consistency in your approach. It's about recognizing patterns, understanding human nature, and having the discipline to act on your insights, even when it's uncomfortable. The legacy of these great investors isn't just in the wealth they've created, but in the principles they've left behind. Their stories remind us that success in investing is achievable for those willing to learn, adapt, and persevere. As you embark on your own investment journey, armed with the wisdom of these titans, remember that the next chapter in this legacy of logic and wealth creation is yours to write. Grow relentlessly, for in the world of investing, standing still is moving backward. Let the playbook of the great investors guide you, inspire you, and propel you toward your financial goals. The market awaits, and with it, the opportunity to turn knowledge into wealth, insight into action, and discipline into success. Your journey starts now.